All right, so in this video, we're going to talk about COBRA, which stands for the Consolidated Omnibus Budget Reconciliation Act of 1985. So yes, laws from at this point, nearly almost 40 years ago, still matter. Okay, so let's talk about what COBRA does. For COBRA, basically what it specifies is that the covered employees and beneficiaries may still obtain health insurance through the employer for a specified period of time after a qualifying event. And the length of time varies depending upon the qualifying event and the nature of the situation. But let me give you an example. So let's say that you have your health insurance through your employer and you get fired. And as long as this is just a normal loss of your position, we're not talking, something of fraud or something like that. So if this is just, you got laid off, okay? So if you got laid off and you lose your job, basically under COBRA, what this means is you may still actually obtain health insurance through that employer. So you lost your job, but you can actually still keep your health insurance through the employer. For a specified period of time. The length of time varies on the qualifying event. So one qualifying event would be you lose your job. Another qualifying event, let's look at if you die. So let's suppose you're on a family plan that's covering you and your family at your employer, and you unfortunately pass away. So if that's the case, then obviously you're no longer employed at your employer, but the family you leave behind, so your spouse and children, they could continue to maintain health insurance coverage for a period of time through that employer. So basically, they can keep their health insurance for a period of time. So you can have things like that. Basically, you could also possibly have some other kind of qualifying events, like a significant disability kind of a thing, if it meets certain criteria, possibly, things like that. So basically, you can maintain that health insurance through the employer for a length of time, even after some certain qualifying events occur that you would sort of off the top of your head think, well, I can't buy insurance through that company anymore, that employer. Now, there is a little bit of a catch though. So let's say you lose your job, you're laid off, and under COBRA, you get to keep your health insurance if you want to, right? So that's great. Here's the catch. The employers are no longer required to contribute. So as an employee, most of the time, what's happening is the employer is actually paying a portion of those health insurance costs and those premiums. And so if you are laid off and you're engaging with the COBRA kind of approach, COBRA policy, so you're going to maintain that health insurance yourself, you can maintain it, but the employer is no longer contributing. So that means expect to be paying a whole lot more per pay period or per month for that coverage, which, if you think about it, it's good you get to keep your health insurance, but you also, in the case if you lost your job, if that was a scenario, you probably have a lot less income coming in. So that's going to be a little bit painful when you have a lot less income, if any, coming in, and your health insurance premiums just sort of in effect went up to you because the employer is not paying any of it. So there is sort of a little bit of a wrinkle there, but you can maintain the coverage at least. Okay, so hopefully this little brief video pertaining to COBRA, the Consolidated Omnibus Budget Reconciliation Act of 1985, has been helpful. And thank you for watching and have a great day.